Hey guys, hope you're all doing good. I just want to put this video together to discuss Rubrik. It's one of the newer IPOs in the industry, in cybersecurity specifically. If we take a look at this chart, something like a CrowdStrike would be somewhere in endpoint security, and Rubrik would fall in the data security and data management portion of cybersecurity. And when you think about something like Rubrik, it's not something that you'd install on your endpoint clients to guard you from any threats or any malware that you might be downloading from the internet. It's something more that's going to be managing your data backups, data recovery, and data storage of all of your backups and snapshots in their cloud, in their hands. So it's actively monitoring these backups, and while it's monitoring these backups, it's constantly searching for threats. They have a particular product called threat hunting, where if in real time, let's say CrowdStrike were to uncover a specific threat or a virus, it would immediately integrate with Rubrik, and it would look in backups to find in the indexing where this threat first started, to restore that backup in an isolated environment. And within that isolated environment, it can actually remediate the issue from the source and possibly bring your entire environment or your production system restored to the time before that, or the time when it started after it's already remediated. It's more on the data security and data backup management of specific applications in the cloud. And it could really be any cloud. It could be in AWS or Azure or Oracle Cloud or so on. And it could even be on-prem. Say you're running a vCenter vSphere client, which is hosting a lot of VMs that you're running in your on-prem data center. It can do that as well. And it could ship off all of these backups to their cloud. Rubrik is a company that started in 2014 by a gentleman named Bipul Sinha. I'm sorry if I butchered that name. But he is the one he's one of the founders of Rubrik, and along with him, he also founded it with Arvind, who's the current CTO, and another gentleman also founded the company. And since then, a lot of their products did revolve around this product called Polaris, which was also a cloud product. And Rubrik is a company that is built for the cloud. It's cloud native, so it does have that benefit over something like Commvault, where Commvault is another competitor of Rubrik, but they had to innovate in order to be in that cloud landscape. And if we go through the timeline here, it's just going through all of the series funding that they're having here. Microsoft, the old Microsoft chairman, he was actually the chairman of Microsoft, chairman of the board of directors, John W. Thompson. He was a very big advocate of Rubrik, and he is one of the founding members of Rubrik. So they do have a large stake in this company from Microsoft. And I'll go a little bit more in the background of these individual leaders in Rubrik right now. But yeah, they did go through all of these series funding. Around 2021, there were a lot of talks that they would actually go IPO there, but they did push that IPO back, saying that market sentiment was starting to drop. And in addition, the Fed was starting to hike rates. So it wasn't really the ideal time to go public. If we think about time in 2021, everything was riding high. Money was basically free at 0% debt, and companies were just exploding. And then, of course, we went through 2022, where debt started to become more expensive as the Fed did start hiking interest rates. And Rubrik saw that ahead of time. John Thompson saw that ahead of time, so he did not want to bring this company public, because honestly, they would have gotten butchered like a lot of the small cap names that did go public in late 2021 and early 2022. So if I fast forward through this timeline, it looks like here last year, Rubrik did surpass 500 million in subscription ARR, and that is increasing very dramatically, north of 40%. Brings us to today, where they did go IPO, and they're currently trading on the public markets. So with that being said, currently the CEO and one of the founders, like I said, is Bipul Sinha. He has been with Rubrik since the start, and he actually used to work at IBM and Oracle. At Oracle, he was one of the lead managers for the database engineering team, so his background really does fall with data. and very tightly with data. So he does understand it. He does understand how it moves, how to integrate in a company, and so on. And he has worked a lot with the backups. After that, he was employed by Lightspeed Venture Partners, where he became sort of a venture capitalist. He would do research on companies, he would understand them, and he'd invest them with private money and private securities, and he would watch them grow. A couple of the companies that he did and was involved in was Nutanix, which is a very successful IT company, in addition to Hootsuite. So yeah, that is the current CEO, and he's still with the team, has a large stake in the company, and of course is looking to grow it. The CTO of the company is also a co-founder, and his name is Arvind, and he is also from Oracle, so he probably had close ties with Bipal over there as well. The current CFO is Kiran, and he also was at Oracle as well. So if you noticed here, 3 of the top leaders in Rubrik were at Oracle, and that's usually how these people meet with each other. They work with each other a lot, and they decide, hey, let's go start our own company, since we both kind of share the same vision. One thing to note as well, their CISO, Michael Mistrovic, he actually was a former CISO, or Chief Information Security Officer, of the CIA. That's pretty crazy when you think about that. You have the former CISO of the CIA working at Rubrik, which is a cybersecurity company. So he has experience in securing one of the largest governmental agencies in the entire world. And now he works as Rubrik as a CISO. So he might know a thing or two about cybersecurity, just a thing or two, but we'll see how that pans out. And currently one of the independent directors, where he actually does not have executive leadership in the team and managing Rubrik, but he is a very large investor in Rubrik, John W. Thompson. And it actually would help if I go on this page so you can kind of see them. This is Bipal Sinha, this is Arvind, the CTO, this is Kiran, the CFO. He looks pretty badass, to be honest. I would not want to get in his bad side. He'll probably just destroy me with his mind. And this is John W. Thompson. You may or may not have heard about him. Like I said before, he was the former chairman of Microsoft, which is quite a large company nowadays, in case you guys haven't heard. And there's a lot more people who are in here, but for the sake of not letting this go too long, I'm going to move on. So as far as Rubrik grows, the workflow of business is basically, like I had said, a cloud native. They take backups and store the backups and archive, replicate them, and so on for analytics purposes from pretty much any client in any public cloud, private cloud, data center, on-prem, whatever it is. They work with multiple operating systems, VMs, Windows, Linux, Mac OS, and so on. They back up this information, and they back up the data on their premises, which is actually hosted in AWS and other clouds, so they're not cloud dependent. And they run analytics, archiving, and everything to save clients money by storing it in their cloud. There's lots of different features and products that they do offer, but from a high level, they're really scanning these backups, making sure that there's no threats in them, and if a threat does show up, they're scanning to see where this threat started, and they're able to bring you back online within minutes versus managing it on your own, where sometimes it might take hours or even days to restore an application after intervening with a threat. So that's the current business model, cloud native. Previous to, I would say, the early 2010s, and even some companies do it today, you have to take backups of your mission critical systems. And the reason why you need to take backups is because something goes wrong, you need to restore to a time where the incident or where the threat did not occur, and you need to bring that up fast, okay? And previously, in order to do backups, there was a method where the traditional backup solution was done on tapes. So if you think about your computer at home, you want to back up your system, you run a backup and you put it on a hard drive, but it's not the same type of hard drive that you think where it's magnetic or a solid state drive. It is actually a tape, and you put this backup on a tape, and the vendor picks up that tape from you and they ship it off-site and they store it there for retrieval in case you ever need that data again. This is a very tedious process. It was very expensive, very costly, and the mean time to retrieval, or the MTTR, was a long time if you needed data for more than, like, let's say 30 or 90 days ago. There were ways to store data on-prem so that way the mean time to recovery could be shorter, but again, this was back then before everyone was in the cloud and all of these services were available at a cheaper cost. This was pretty much the primary way to back things up. Rubrik, when they first started, and for more than a few years, their flagship product was called Polaris. And Polaris is actually very similar to the existing flagship product that they have. They basically just rebranded it. They have a new UI that they provide, which is, of course, is all cloud native. You don't need to install the software on your system or anything. And you can see all the metrics. It's connected and integrated with all the services once they get you set up, or you could set it up internally on your own. But this makes it very easy to pretty much centralize the entire data backup, data recovery, and data archival process and let Rubrik manage it for you by just creating a few policies. Like, you literally point click, maybe type in a few parameters, drop downs, choose certain values and what you want your retention value to be, how often you want to back up, the times you want to back up, and so on. And Rubrik literally takes care of the rest once it's actually integrated with your application or your systems. If I bring up their most previous earnings, they have a very nice presentation here. 856 million in subscription ARR, and that is growing. It was growing 46% ARR growth year over year, which is actually really good. Their average subscription dollar-based net retention is 120%, which is really good as well. If you take the amount of money that their current clients pay last quarter, they basically are 46% in addition to that amount that they had this quarter. The average dollar-based net retention, basically the amount of money they're getting from new client signups, 120%, and customers paying $100,000 or more is already 1,856. So in addition to that, they pretty much give like a high-level view here that their TAM by 2027 is about 53 billion. But this is something that's calculated by this company alone, or maybe by some research companies that they pay to do it for them. It's not 100% accurate. Like, you can't look at this 53 billion and just say, oh, okay, they're going to have $53 billion in revenue by 2027. They're going to explode like 53 times. Like, no, that's not going to happen. These numbers are very volatile. They can jump up, they can jump down. They're probably going to grow bigger, which means that the possibility or projected market that they can actually address will grow bigger, which means that their revenue will grow bigger if they do take a portion of that. They kind of give like a high level of where they stand. You know, you have different CM applications, cloud applications, network security, endpoint security, and so on. You can see CrowdStrike, Microsoft Sentinel-1 here for CM. You can see Splunk, Microsoft Defender, Tenable, also Datadog I would put in this category. Cloud is Zscaler, identity is Okta, but they don't really compete with these directly. They basically monitor your data security, which a lot of these vendors don't actually do, and that's where Rubrik can kind of come in and fill in the gap. So the data attacks are exploding as well. So instead of having a ransomware attack every 14 seconds in 2019, they are projecting that by 2031 there's going to be a ransomware attack every 2 seconds, which is a lot and very recurring. If we think about something like AI and how fast intelligence is growing, we're thinking about it today in a good light, right? Like, you have companies that are building and working with LLMs and processing data faster, but we're not really giving too much thought into when this capability is going to get into the wrong hands and be used against these companies. So Rubrik kind of gives the traditional security approach where there's different layers of security: perimeter, network, application, endpoint, identity, and then behind all that, they are generally protecting the data. The way that Rubrik works is that they are protecting the data for you, so they're able to hit that last layer of security. At the end of the day, they're really going for the zero trust design where it is authenticated based on your SAML or SSO connection. So if you have Active Directory or basically a table of users that particular user or company have certain rights. Rubrik doesn't have their own database of their users and passwords. They use that connection of what you already have existing in the back of your architecture to be able to authenticate in using their platform. So you're able to have that zero trust, like you're constantly authenticated every single time, whether it's through automation or through APIs. You're constantly authenticated against your own Active Directory or Entra ID. This is showing their total addressable market today, which is 36 billion, and they're projecting a 30% CAGR compound annual growth rate to 53 billion by 2027. They do tackle the security and data management sectors for cybersecurity. So this does not include other sectors in cybersecurity, like let's say, for example, endpoint, CM, and so on. So they posted this slide over here to show that they are pretty much one of the leaders in cybersecurity when it comes to data management and data security. A couple of their other competitors is Veritas and Cohesity, and Commvault is here as well, also Veeam. These are other backup solutions that are provided, but one of the newer ones is Cohesity, and Cohesity is a similar company to Rubrik, and it is actually backed and invested by NVIDIA. So some people see that, they see Cohesity and it's like, oh, it's a good competitor to Rubrik, so that means Rubrik's going to get its lunch eaten. It's like, no, that's not really the case. NVIDIA is just venturing into that sector, and of course you have Jensen Huang, who is the rock star of the world, backing that company. So it might create some fear around this company in terms of how successful they could be, but $53 billion TAM by 2027, there's enough to go around. I wouldn't really worry too much about that one. Over here, they talk about generative AI and leveraging it and so on. What other company is not talking about generative AI nowadays? So I'm going to leave that there. Again, this is another slide that's basically saying how they don't really directly compete with Zscaler, Palo Alto, or CrowdStrike. They're more in the resilience portion. Okay. The IPO that they recently had released millions of shares into the public. Okay, so they basically took their stake in the company and they sold a bunch of it to the public markets, and they used that money that they got from selling to add to their cash balance. So if you think about that, they got money for free, right? They got almost $1 billion for free? No, they didn't get it for free. They had to sell part of their company at the expense of acquiring that. So this is actually considered debt to the company, because if those shareholders decide tomorrow, I want to sell all of my shares of Rubrik, guess who has to buy it back for them? They don't have to do that, and it's probably not going to happen. What I'm saying is that this is debt. This is money that they owe to the shareholders. So in a way, this is good for them in the short term, because they're going to take that capital that they got from the public markets and they're going to reinvest it back into the business, hopefully getting good return. And at some point, this company will buy back its shares from shareholders, probably to higher dollar values as the company is going to be growing. But the hope is that reinvesting that money, that debt that they took from the shareholders, they can turn it around, make like 10 or 20 times that amount, and then buy the shares back at a greater discount. That is usually the hope that these companies do. This is their business model. All right, they're really focusing on subscription ARR. They're focusing because they are a cloud product, and they do offer a cloud product that they go under contract with certain companies, and they say, hey, you owe this much in total contract over X number of years. So let's say they sign a $300 million contract with a company over the course of 3 years. That means that their annual recurring rate that they're going to get for that company, or annual recurring revenue they're going to get for that company, is $100 million. $100 million a year, 3 years, that's $300 million. That's basically how that works. The more of these that they sign up, the more clients that they sign up, or the more that they upsell or cross-sell to their clients. They do practice a land and expand model. So if they were to land a client and sell one product to them, if they sell 4 products to them that same year, that means the amount of money they're getting from this client is actually going to go up, and therefore increase their ARR. Okay, so in this chart, they're showing that they're landing new customers and then expanding and extending. So they're selling more products to their existing customers, increasing the ARR, and they're acquiring new customers for their net dollar-based retention. All right, and over here, they kind of go over more on how they have 1,859 clients paying over $100,000 or more, and they're expecting all of this to increase. Okay. In this one, they're going over their gross margins. When you think about a company, like a SaaS company, they incur a lot of their expenses upfront, or capital expenditures, through hiring, SBC, and so on. Most of their revenue and the amount of money they make from people and from clients, when you take out the cost of revenues, it's actually north of like 70%, around 80%. That's usually how SaaS companies work. So the more clients they sign up, the less cost it'll take per client to fund all of that. So that's why initially you'll see these non-GAAP gross margins around 80%. But once you take off all the costs and everything, it actually ends up being that in a company like this, they're actually losing money on a quarterly basis. But later on, the hope is that they end up growing and decreasing those costs because they sign up more clients. And in addition, they will start to turn a profit. And then at some point, when they turn the profit, they'll start buying back the stock from people, increasing shareholder value. The guidance they had for Q2, total revenues is 195 to 197 million. They had about 180-ish million that they made this quarter, and 170 of that was in ARR. The rest was in one-time charges that they made to clients, maintenance, services, and so on. Again, they are not profitable. They're burning cash. This quarter, it looked like that they were free cash flow positive, but that's because they issued a lot of debt by going IPO. So technically speaking, they're still burning cash. For fiscal year 2025, they're expecting 983 to 997 million in subscription ARR. In total revenue, 810 to 824. So they do expect to improve on these ARR contribution margins from negative into closer to positive territory. And their non-GAAP EPS for the entire year is negative $2.35 and negative $2.25. For next quarter, it's negative 50 cents to negative 48 cents. So at the end of the year, they didn't give guidance for free cash flow for next quarter because there will be a dramatic decrease from this quarter since they just did go IPO. But for the entire year, they're expecting to be about negative $100 million in free cash flow. So we are going to see improvement. We're just not going to see them become profitable in terms of free cash flow this year. So you need to know that when you're making an investment like this, that they're not going to flip into profitability next quarter, not the quarter after that, and probably not even in 2026. They're not going to flip to GAAP profitability, but you will see terms like non-GAAP, which will make it look like they are. But once you address the SBC and all the research and development expenses on a GAAP basis, they are still going to be burning cash. Okay, so this GAAP to non-GAAP reconciliation is basically showing you how they get the non-GAAP number from the GAAP number. So if we look at the latest quarter, their GAAP gross profit was 91 million and non-GAAP gross profit was 141 million because we are subtracting the stock-based compensation as well as the amortization of acquired intangible goods. And this is coming from a revenue of $187 million this quarter. This is more that's showing sales and marketing, general expenses, research and development, and this is more. This is focusing more on the operations. They had negative $724 million in operation GAAP loss, but that is because, again, this is showing the stock-based compensation that was issued for the IPO. So they were able to basically get about 630 million from the sale of their shares or IPO. At the end of the quarter, they basically had $508 million in cash and cash equivalents. Going last year, they had 129, but they didn't go IPO and they had a lot of expenses. So at the end of this quarter, $508 million in cash and cash equivalents. So now that we kind of went over most of their financial analysis, I wanted to go over their valuation, okay? And this is pretty hard to do because they just went IPO. We really don't have any data before April 2025. As far as technical analysis goes, it's very difficult to use technical analysis on this company because they just started trading, so we can't even use the 50-day, the 100-day, or the 200-day simple moving average. Support and resistance is very difficult. Demand and supply zone is very difficult, and even coming to the buy area is pretty difficult. Like, you're kind of taking a gamble. This company just went IPO, so it's very difficult to know where to buy this company. But given market sentiment right now, it's very possible that it could drift lower to the low 20s if we do have a 5 or 10% pullback. And the only thing that I could actually do here is do a fib retracement. So if we look at the 1.27 fib retracement line, it's at 25.49, and then the 1.618, which is a very popular one that people use, is 21.52. So if I were to start nibbling into this company, and when I say nibble, I mean like buying, let's say my max position is 1% I want to have in this company, since they are a non-profitable company, I would nibble like maybe 10% of that position, and I would wait until it drops below 25 and then continue nibbling on a dollar costing average basis around this level, so I can come up with an average around here. But even then, I would still be hesitant if the market is still showing weakness around that time. If it got below 21.52 or even somewhere in the low 20s, that's probably when I would go harder and fill in the rest of that position, and hopefully hold it for a long time, 4 or 5 years, see where it goes. You know, it's backed by Microsoft. Its leadership is very well experienced in data management. They're not directly competitive with one of the big players in cybersecurity like Microsoft, CrowdStrike, or SentinelOne, or Zscaler, or Palo Alto, and so on. They do have their own competition, but I would say that TAM is growing pretty fast for the sector. The market's not really thinking about the sector right now, which does give it that much of a better price. But right now the market's running pretty hot. The AI stuff got a little carried away, valuations got a little crazy, so it is time for a little bit of cool off. So I could definitely see this company coming down in like the low 20s, and if we get to like the low 20s, I'll probably start filling out some positions. So the max size I'd probably do for this position is a little bit less than 1%, but I'll keep you guys posted on my plans for that. But as far as that goes, that's pretty much it. Please let me know if you have any questions. I'm going to try to downsize this video, but this might be like a 20 to 25 minute video. All right. Thanks, guys. Have a good weekend.